So let's see what happens if you issue debentures as a collateral and the company is unable to meet its obligation for the interest or loan, and the bank revokes or invokes its right in the debentures. Right? So let's see this particular case which deals with this aspect. XYZ Limited took a loan of 10 lakh on April 1, 2010 at 12% per annum, which was securitized by plant and machinery and was repayable on March 31, 2011. So let's prepare the sequel of the date. So April 1, 2010, loan taken, repayable on March 31, 2011, along with interest. So the interest also has to be paid on this date. What's the difference between these two periods? It's 12 months. The loan was collateralized by security of 12% debentures of 500,000. So you took a loan of 10, you issued the security of debenture of 5. The company was unable to pay the loan on due date and the bank sold off the plant and machinery for 600,000. So this is the third variable. It also invoked the right vested in it for the debentures on June 30, 2011. Past journal entries for the above transaction. So let's do it one by one. The first one being the day when you took the loan. So when you took the loan, you would have got cash in the bank. So you would debit bank account being an asset account. How much? By 10 lakh. I'm just using in lakhs. To loan account. Right? Because you've taken the loan of 10, so you've credited the loan account by 10, which was securitized by plant and machinery and was repayable on March 31 along with the interest. So nothing happened from April 1 until March 31. But on March 31, what you need to know is that the first thing that happened was that your interest was due. So now interest is an expense, right? So you would debit interest account, debit to who? Who would you credit this? The lender. We don't know what the name of the lender is, so we will credit the loan account here. Right? Or otherwise, what you can also do is, instead of loan account, you can just credit this to outstanding interest account. Now on 10 lakh for at 12% per annum, the interest for 1 year will be how much? 10 lakh principal into rate of interest, right? This will be 120,000 or 1.2 lakhs. So you put in 1.2 here and you put in 1.2 here. Right? Now, basically, what happened was that on this date I said I am unable to pay my debts. So if when I said that I was unable to pay the loan, the bank sold off the plant and machinery for 600,000. Right? Now when the bank has sold off your plant and machinery for 6 lakh, obviously your loan account which is pending would go down by how much? 6 lakh. Let's assume even this transaction happened on 31/3/2011. So loan account is reduced by 6 lakh, right? So what will you do? You will kind of reduce your loan account. You will debit loan account by 6 lakh and you will credit it to what? to plant and machinery. We don't know what the cost of plant and machinery is and whether there is any profit and loss. So we are not getting into those aspects here, right? Now, what happened was that the bank invoked its right for debentures on June 30, 2011, right? So the first question which comes up is, how much debentures? Why? The question is important because what happened is that the bank total liability due to the bank was 10 lakh, out of which they took plant and machinery for 6 lakh, so their liability left is 4. But in addition to this 4, you have interest also, which was outstanding as on 31st March, which is 1.20. So the total amount due to the bank was 5.20. However, there is one more important thing that needs to be borne in mind, which is that on this 4 lakh, which was not paid, the bank is also going to charge interest from March 31, 2011, which is the date on which this amount was due, until June 30, 2011, the date when it invoked the debentures. So for 3 months, the bank is also going to charge interest on this 4 lakh at the rate of 12%. So the interest will be how much? Principal, which is 4 lakh, into rate of interest, which is 12 upon 100, into period. Period is 3 upon 12. Right? So this goes off here, 1, 2, 1, 2, 12,000. So we will provide another entry here where we will debit interest account debit 12,000 to outstanding interest account 12,000, right? So in addition to this 5.2, you also have 0.12, which is the outstanding interest payable to the bank, 5.32, right? Now in settlement of this 5.32, what the bank got was only debentures worth rupees 500,000, right? So what we can say is that the loan account, the balance 4 lakh which we didn't debit here, will get now debited by 4 lakh. Okay, the interest outstanding gets debited by how much? 12,000 plus 1.2 lakh. So you can also write this as 0.2 for the sake of consistency instead of 12,000. Which is 1.32 to debentures, which is 5. And where would this balance of 0.32 go? You can write it back to the profit and loss account, because the interest which you have booked till date has also been booked to the profit and loss account, right? So there are two manners in which you can do this. You can write it back to the P&L account also, right?